Hello everyone and welcome in a new daily technical analysis video. Today is Thursday, the 20th of July, and this video is brought to you by the market research team at ONEPRO. Let's have a quick look on the markets for today, but before diving into the technical analysis, we just need to mention that we will be having some important US data to be released for today. And just to mention the initial jobless claims, which is a weekly figure that we always watch for. And we also have the Federal Manufacturing Index by the Federal Reserve Bank of Philadelphia. And to end the day, we will also be having the home sales, existing home sales for the month of June. And we also will be looking for the Federal's balance sheet, although it's not something that we use to take short-term trading opportunities. However, on a longer scale or on a longer time frame, this is something that we should definitely watch in order to try to figure out how the Federal Reserve will be doing in the upcoming meetings. So yes, we will be having some important US data today, and we will be expecting some higher volatility than usual. Starting off with the technical analysis on the dollar index, basically we mentioned yesterday that we are having this some sort of support here on the 4-hour time frame, and we expect a move higher to the levels of 38.20 Fibonacci retracement. The European session started off well. However, we went back during the US session as well as the Asian session to retest the levels of the previous high, which is around 100 points, which is basically something that we can expect to see because this is now a double bottom pattern, okay? So a move higher above the neckline or this sort of resistance, and to test this level again as support is something that we can basically expect. We still have our bullish view on the US dollar index as long as we are trading basically above the levels of 99.50. We can expect to see a move higher to the levels of 101, which is around the 38.20% Fibonacci. The euro basically starting to show some weakness here from the levels of around 1.12. We also mentioned yesterday that we will be expecting a move lower to the 38.20% Fibonacci, which is 1.11. Still, we didn't see this downward move that we expected. It was all because the dollar index yesterday, the movements in the markets overall were just, limited. We didn't have any major moves. So today, in case we see this upward move that we are expecting on the dollar index, we might expect this downward move that we want on the euro. The pound was basically one step ahead, and we had this brilliant move lower that we expected to the levels of 50% Fibonacci, just around 1.2863. Initial support was found, and we can see this bullish price action here. A very minor retracement took place, another bearish price action took place, and yes, it seems that we will be heading lower again during the day to retest the levels of 1.2863. So we are looking for a margin of roughly 40 pips lower on the pound during the day. The dollar versus the Japanese yen went a little bit higher because basically the Japanese yen was much weaker, and we didn't yet reach our target of 38.20% on Fibonacci, which is around 140.22. However, pretty sure that we will be, not 100% sure, but I mean, the expectation is that we will be seeing those levels today. We're currently trading at 139.54. So we are seeing or looking up for a 70 pip move to the upside on the dollar versus the Japanese yen. Gold trading basically is doing nothing since yesterday. We expected that we will be having resistance at 1983. It seems that gold is going or went already for another retest to the levels of 1983. However, overall price action and the price behavior here is slowing down in momentum. So we might spend some time around or just below the 1983 before rejecting those levels as resistance, which is my personal opinion. We might even see a false breakout to the upside, okay? So a false breakout is something that we could see, and this false breakout, I can see it should be limited just below the levels of 2000. So yes, a false breakout could take place of $20, which is quite a high margin. However, at the end, let's agree that the main resistance is the levels of 1980. We shouldn't basically trade above those levels for so long. So either we reject those levels from here, or we go for a false breakout, which has an upper limit of $2,000 per ounce. I still do really believe that the gold is going to target lower prices, and I still have my target around the $1945 per ounce. Let's end this quickly with another last look on the Dow Jones. I think we don't need this anymore. The Dow Jones is pretty much doing nothing yet. On the daily time frame, we mentioned that we are still trading in a very major supply zone or areas of huge resistance. And yes, on the 4-hour time frame, if you could notice here that the momentum is decreasing as well. We are having on the price what seems to be a definite higher high. However, it's a lower high on momentum indicators. So those are the clues that you can see, yes, if we're approaching a resistance area with a decreased momentum, we shouldn't really break above this level. So we're still waiting for bearish signals. I mean, those signals or clues that we're having on the Dow Jones are bearish. However, they are not the short signal. I mean, we should wait for extra confirmation to short the Dow Jones on the short as well as the medium term. So that was all for today's video. Thank you very much for watching this. Please stay tuned for future videos and please stay safe.